Hey everybody, Chris Johnson with Monument Traders Alliance. Palantir is no longer a buy the dip stock. That's right, you heard me. It used to be you could buy this thing if it dipped 5%, 10%, 20%. It didn't matter. You made money over the long run. Not the case right now because of three subtle changes that we've seen over the last 6 months. I'm going to walk you through all three of those changes, as well as my target price for the stock and a couple of ideas on how you can protect your positions in Palantir or even profit from these lower prices. Stick with me. 5 or 10 minutes. You're going to learn a lot. You'll be a better investor for it. Let's jump into it right now. All right, as I always say, let's jump into it right now. I already talked about three subtle things that have made a change in how Palantir is reacting. We're going to go into those as well. I don't think many of you are going to know about them, so it is well worth the wait here. What I do want to talk about is what's not wrong with Palantir. We just got done with earnings. Late February, they came out with their earnings, and Palantir did exactly what they normally do. The company came out, they beat on the top line, they beat on revenue. Look at this number here. This up here is 70%. We're getting up to a point where Palantir's revenue on a year-over-year basis is growing by 70%. That's what they gave us at the end of February. Earnings per share growth, 19%. They've done better on that earnings per share growth, but they're keeping it consistent, and they beat, by 2 cents. It feels like almost a Cisco situation where they want to turn into that company that beat by 2 cents every quarter, because that's what they've done here. They're trying to get consistent. But nonetheless, the one thing I look at, and the one thing you should be keeping a look at, is that revenue, because we know the valuations for Palantir were maybe a little bit stretched, right? But when I look at the analysis of what actually happened and how the market responds to those earnings, the outlook versus the expectations, everything put into one here, Palantir is still maintaining a course that is stronger than any of the other Magnificent Seven stocks. I'm going to underscore that. Their performance from their earnings, if you look at it every quarter, what the stock does, it is stronger than any of the Magnificent Seven stocks. And we've seen over the last 6 months, over the last 9 months, this is a company that is becoming very consistent in actually performing on those fundamentals. So the fundamentals, don't worry. And for those out there that are saying, oh, he's just a bear on Palantir, no. I've been bullish since 2023, 2024, and I've owned the stock the whole way. I'm still long on January 2027 leaps. I've got those calls. So very much engaged in the long-term outlook, being bullish on Palantir. I think that the short term just has a lot of bumps and bruises that nobody wants to go through. 20, 30%. And when you say 30% or 40%, CJ, there's no way. My gosh, this is a company that ripped 60, 70% of its value out within months back in 2022. So yes, it's happened. And remember, this is a little bit of a crowded trade. By the way, make sure you like and subscribe down below. Monument Traders Alliance, we're putting out all kinds of content like this. You can jump into our command center. I do a Monument Trader Alliance live session every week where you get information like this. All you have to do is sign up for that free trade of the day down below and like and subscribe to the channel here, and we'll get all of that to you. Here is what they did though. Palantir's earnings, they came out, and once again, those actual earnings per share reaching up to their highest, 25 cents. And this is the last 5 years worth of data. This is the first thing most people might notice. Look at how we've gone from these overwhelming responses to those earning beats to now some subtle numbers. We're just up 6.8% from the last earnings report that came out just a week and a half ago or so. So investors aren't getting as excited. We're seeing a little bit of a buy the rumor heading into those earnings announcements, but the reaction afterwards is a little more muted. This is part of what everybody loved about Palantir. Let's talk about that for just a second. If you backed up 2 years ago, Palantir was that, let's call it the Maverick stock out there. It was a stock that Wall Street hated. You used to have the analysts coming out and talking about it, saying there's no way that they're worth this. But what did you and I do as retail investors? We jumped on every opportunity We bought those dips, and the stock continued to pay us for it. Wall Street got angry about that. Alex Karp called him out on CNBC a couple of times, and it was all good fun. But what we're starting to see is a little bit of a normalization to the response to those earnings, and that's what I don't like, because we've seen it with Apple, we've seen it with Microsoft, we've seen it with Amazon, and this last quarter was especially rough. If you're not coming out and really blowing Wall Street's hair back with your results and your outlook, they're going to punish you to some degree. Palantir is not getting punished, but a technical signal that I'll show you in just a second says that there's more pain coming. So what we're concerned about here is a little bit more of those subtle reactions. Those are 2 weeks after the earnings announcement. The performance, we've seen 11.2, 6.8, 8.3, and barely eked one out a year ago at 0.7. Remember, that 0.7 was right ahead of some mayhem that happened in the market as we went into March and April, the tariff tantrum. I would say that those were unusual circumstances, and we'd call them Six Sigma events, but we're starting to see some of those events right now. So add that to the outlook that we're talking about right here today. So Palantir is doing what they're doing. You're still seeing a 68% win rate, but the problem is that something else bigger has changed. Fundamentally, I already covered that. We're fine. Technicals. Now we get into the charts, and that's where it's interesting. There's no long-term problem yet. I told you I'm still a long-term bull. We're above the 20-month moving averages. We'll look at the chart here in just a second. But Palantir remains in a long-term bull market run. That said, the short and intermediate term have turned bearish. It's not neutral. It's bearish, and I'll show you the trend line that tells us that in just a second. Down here, sentiment. There's your growing problem right now. Underneath the skin of this stock, there has been a tectonic shift in the sentiment that takes it from a stock that had, I don't want to say unlimited upside, but exaggerated upside, to now a little more of a normal upside. We'll talk about that. It's a really interesting aspect, and a lot of investors don't really know about it. Let's talk about that technical picture has changed. This is why the stock is not finding those pockets of strength. The buy the dip moves. I'm going to keep this. Let me keep this on this chart for just a second, because this is interesting. I put together where we saw those buy the dips. Same problems in place with the Magnificent Seven. Actually, it's a little bit worse when we look at Amazon down below 200. Microsoft also, careening lower here. Investors have switched out of that safety trade phase. Think of these stocks as an aggressive buy the dip to, nope, I'm going to sell the rips. And when that happens, it leads us into these intermediate bear market corrections. 15, 20% we've already seen on some of these stocks. I'm talking 30, 40% maybe before this is done, based on what happens in the market. We saw the same problem with the Magnificent Seven. They were the go-to stocks in 2026. That's no longer the case. At the root of this is the question about AI. We saw valuations, everybody ignore the term valuation just 6 months ago. When we saw Meta coming out and blowing out numbers, the price would go up 10-15% after those earnings. We saw Oracle, obviously, after their huge news that they had over the summer, the stock goes up 30%. But right after that is when we saw everybody start to talk about the valuations. Is there a Salesforce.com argument that supports Oracle or Microsoft or any of these AI companies? A ServiceNow situation, a SoundHound, to give you some of those riskier stocks. In other words, are we seeing that AI equation for success, for profits, actually start to materialize on some of these aging companies? The answer so far is no. They're not making the big margins, so now investors are questioning not only the valuations, but when we hear about these companies putting large amounts of CapEx into their businesses here over the next 2 years, it starts to frighten investors because they're worried about how long it's going to take to have those investments come back. So that is your underscored problem here in terms of these AI companies. It hasn't been a problem so much for Palantir because everybody just said, well, the government work is great and they'll keep that. But remember, Palantir made a push to try to get into the business sector last year. It was working, and now we're not really seeing that follow through. So all of that comes into a point where we get a little bit of a shift in that buy the dip. And these green arrows are literally where we see those 5-10% pullbacks in Palantir. I did it along with you. I'd go ahead and I'd buy a 3-month call option at the money at those points and just let this thing rip. And it did well for us. That type of consistency is exactly what investors and traders specifically love to see. And now we're seeing a shift in it. Every one of these 5% rallies, 10% rallies, they're getting sold into. So a little bit of a sell the rip. And here is your questionable one. Right now, we've been up about 6% from that earnings call that they just had. And the stock is kind of fluttering right around that $145 level. And at the same time, when you look at it, you've got this guy, the death cross. It sounds ominous. It really does, doesn't it? Whew. I'll put X's. If I could do a skull and crossbones, I'd do it. But that is the death cross. You're going to hear about this with a couple of other companies in the NASDAQ 100 over the next few weeks because the list is growing of companies that are setting up this pattern. And it is a technical pattern. Real quickly, I'll give you just the breakdown of it and why you need to pay attention to it. This is not a pattern that'll give you a situation where a stock trades down 15 or 20% lower over the next 5 days. It's not that type of an indicator. What it is a longer term or intermediate term trend indicator. We all hear about momentum. This is a great momentum indicator. It uses two of the best trend lines out there for tracking momentum and whether the trend is your friend, and a situation that they can put out there to say, hey, things are going to get uglier. Let me start with that first, and that is the green line. That is your 50-day moving average. For those of you that might ask, it's a simple moving average. It's not an exponential. I like the SMAs. Keep it simple, silly, right? The second is that blue line, and that is the 200-day moving average. When you look at those two indicators, those are the two most popular trend lines in investing, period, end of sentence. 7, 5, 10, 14, 21. You can use all of those. We can put together as many as possible, but the bottom line is the more people that are watching a trend line, the better it works. If you watch the 84-day moving average, it's not going to work because you're one of about 7 out of the millions of people that are investing that are watching that. No, but everybody watches about it. You'll hear Mike Santoli talk about the 50-day on CNBC. He'll also talk about the 200-day. Their momentums, and when that 50-day starts to roll over, as it did in early January, that is your number one sign that there is something wrong here. There's an erosion in the long-term momentum. The next thing that happens is it crosses below that 200-day moving average. That is your warning sign that the next 4 to 6 weeks are going to see lower prices. Lower volume will also happen, except on the selling days. So you take those sell the rips that we've seen, buy the dip changes to sell the rip, and you take the fact that we've got a death cross that just formed on the stock, and you've got a situation where you have to look for lower prices for Palantir. I'll give the prices in just a minute, and obviously I'll cover these on Monument Traders Alliance on the website. I'm going to talk about it during our live session today. But anyhow, combine that with the other thing that I pointed out to you, and this is where it's really red. There's been a shift in the sentiment picture for Palantir as well. We saw this stock, again, if you think about it, 22, 23, 24, the stock bottomed. Investors ran into the stock because it was the newest thing. It was going to be the baddest thing in AI, right? And we got ahead of Wall Street. Wall Street hated it. You know why they hated it? Because in 2021, if I go back all the way on that chart of the guidance and the earnings, here it is. If I go back to this chart, you'll see why Wall Street hates it. Wall Street was incredibly bullish right here going into mid-2022. And what happened? Palantir started missing their earnings per share targets. Wall Street couldn't stand that. They left their buy recommendations. And a lot of people say it's because Palantir sold these shares directly and they didn't go through the investment banking. No, the analysts had these stocks heavily ranked buys at this point, and they got, if you will. The earnings dropped and they were left holding the bag. They went to buy and sell recommendations and have never really gone back to where they were, except we've seen a change now. This is a 6-month view of where we were 6 months ago and where we are now with the analyst community on Wall Street. 6 months ago, and that is September 24th, 2025, 40% of Wall Street analysts had this rank to hold, 7% a buy. The other 7% there, this has got to be somewhere. That's a 37. The others were in the, actually, the marking is incorrect. The pie is correct. Anyhow, the others were in the sell category. Today, we have 37% of Wall Street analysts on the buy side of Palantir. That's the highest it's been since 2022. Only 5% sells, and then you've got 23% that are actually in. And I'm sorry for the graphic error there. Those are the actual number of those analysts. So, but you can tell that we've seen a huge shift in the sentiment there with those Wall Street analysts. That's because they started to feel like they were getting left behind. And Wall Street doesn't like to be left behind. Alex Karp, as I said, came out. They were beating earnings, coming out, making fun of those Wall Street analysts, and they have slowly started to shift back into buyers of the stock. That starts to tell us that there's a little more optimism out there on Palantir. The more optimism out there, it feels like it's good, but it means the buying power towards the stock has been exhausted. There's your one view of the sentiment. This is another view of the sentiment that you're not going to see anywhere except for right here. It's the open interest configuration for Palantir. What you're looking at is the March expiration. I don't look at weeklies. I don't look at 0 data expiration. I look at the monthly expiration options. And in this particular case, you can see right up here at the $150 and the $160 strike, there are large call strikes, a lot of open interest with very little put open interest. Well, what that means is that the market is overweight on its bullish bets at that $150 level or so. Look at this chart. What's the stock recently crashed through and is now having problems getting above, right around that 147, 148, and 150 level. Right now, the options market is too heavy on its optimism. It's been whistling past the graveyard, thinking that it's going to go above that $150 mark, and that is not going to happen. Now, at the same time on that chart, look at what the put option traders have been buying. They've been down there at the 100 strike. Notice how that stands out. This is where a lot of the options market is starting to target where Palantir will head before that third Friday. And it's only 2 weeks from this Friday in March. Take us from that current prices down or up around that 140 all the way down to that 100. And you start to get a chart where I have to go back here and actually expand this lower for you so we can see, or I can go to the monthly. And from today's price, that takes us about 29 to 30% lower from today. Now, CJ, you said it was only 2 weeks away. Well, let's take a look at what happens here if we look at the April expiration. Once again, this is a month later, so this is giving us a little more time. Got a lot of people up there on that 140 call, and look at all the puts now that are streaming all the way down to that 100 level. We'll have some support at some point at that 130 and that 120. But as we watch this, and I watch the volume every day, that 100 strike is starting to become more populated in April as well. And that tells you that the sentiment has turned bearish. People are looking more at the bearish scenarios playing out for Palantir. Now, one last thing that I like to look at, and this is for going out and seeing, hey, where could this go? I've already put 125. I think that's an easy mark. 100. I think that is the bottom there. Now, if you look at the monthly chart that I'll flash up here, $125 is right there. Right here at 118 is where your 20-month moving average is, and that is the line of demarcation between a long-term bull and bear market. We could see a little bit of support there, and if we break that, 100 is going to be the level you want to watch. And conveniently, round numbers always play as support and resistance. Back in 2025 and early, we actually had 3 months where the stock did a lot of conjecting movement around there, kind of a lot of volatility around that $100 level. So as somebody who's a long-term bull on Palantir, I look at this from the perspective of $100 is that price that I now want to try to plan on as a worst case scenario for the stock, and the point where I would probably be adding to my long-term positions. And by those, I mean my January 27 and those January 28 leaps that are now open that you can purchase as well if you're an options trader. One little note on this chart as well. Look at how oversold it's been, or overbought it's been for so long. Overbought can become more overbought, but eventually it corrects. And I'll point out one little thing on the daily chart as well when you're looking at that analysis, and that is that we are now, can't put the Bollinger Bands up on this one, but we're trading below or just right at those bottom Bollinger Bands. And when we start to break through those, it brings more and more volatility. So what is an investor to do in these situations when they think, hey, we could see a stock go from that 140 down to 100? Oh, I forgot to give you your seasonality. And by the way, let me throw it in there one more time. Make sure you hit the like and subscribe if you're still with me here by this point. You must like what you see. Also, click on the link below and get your free trade of the day from us, and we'll let you know when we're doing an MTA, Monument Trader Alliance, live session with me once a week. Great information just like this for you. You are here is where we are today in terms of the seasonality trend. This line, you notice that all of these lines, and this is all 6 years of Palantir's existence, you see the first 3 to 4 months of the year are very, very muted. Returns don't come in the first 4 months. First 3 months, you're a 50-50 chance you're going to make money on the stock. And in April, it actually drops down below 50% and the returns go negative. We don't really hit any type of stride with Palantir until after May. So seasonally, not a great time to be holding the stock. Keep that in mind as the market is already working against us. Bottom line it for you. We're becoming harder to please, which means more challenging price environments, selling the rips. Technicals are bearish for the next 2 to 3 months. That death cross has a 4 to 6 week outlook that brings stocks down usually 10 to 15%, but we could see up to 30 right now because of how crowded Palantir has been. Retail sentiment has shifted. More investors are selling, getting out of those positions, and seasonality remains weak through the July. This all sums up to a target price of 120 with the very real possibility that you're going to see $100 on Palantir before, maybe not before its next earnings, but certainly I think before May, June or so. Protection is the name of the game here. A couple of simple ways. I told you I'd give you a couple different ways to look at it. First line of defense. If you're still holding Palantir and you're afraid of another 20 to 30% drop, use a stop limit. Just keep it simple. Take profits and then always have a plan. If you're selling it at 140, maybe you want to buy it at 120. This is not investment advice. This is just saying a very simple strategic plan of buying the stock back at lower prices helps investors like you and I outperform the long-term markets on these type of stocks. Second defense is an inverse Palantir ETF. I've got one right here. I'll show you. PLTD is your ticker symbol, and that is the daily Palantir bearish one-time share. What does it do? You buy one share, and it will go up 1% if Palantir goes down 1%. If it goes down 1% or up 1%, your inverse Palantir bearish fund is going to go down 1%. Some people will use this as an easy way to hedge their positions. Simply pick what portion of your Palantir position you want to hedge and buy those number of shares of the PLTD. It can be that simple. The third and more aggressive defense, buy puts on Palantir. I myself use this strategy. I buy at the money options or slightly out of the money options. I'm not speculating, I'm protecting. So I don't go 5, 10, 15% out of the money. I just buy at the money options. Sometimes I even buy in the money on volatile names like this simply because I'm playing the trend. I'm not playing an event. Nothing like this. My ideal approach is own those at the money July options right now on Palantir. It covers me over the next earnings announcement that'll come in a little under 3 months here, and allows me to play out that 4 to 6 week outlook on Palantir, which is bearish, 125 down to 100 possibly. And again, in both of those cases, all three of those cases, have your plan to exit those hedges. And what are you going to do with that money? Put it into cash. Put it into a money market. Put it in a sock in the drawer. Put it somewhere, but don't ride those hedges as if they're long-term trades, because that's not what they are. They're situational trades. I usually use those proceeds and go and increase my position in the same stock because I am a long-term bull. That's going to be it. I hope you learned something. We went a few minutes over. Goodness, we went quite a few minutes over 15 there, but lots of information. Remember to check me out at Monument Traders Alliance. I do the Monument Traders Alliance live show every Wednesday. Usually we're doing it Tuesday this week, but lots of information. We break down the markets, and you click on the link below and you'll get that free trade of the day. All kinds of information from the tacticians at Monument Traders Alliance. I look forward to seeing you the next time. And as always, I wish you the best trading success. Have a great day.